Welcome back to CryptosRUs. I am George. We're all George. So today, I know there's a lot of fear still out there about Bitcoin and crypto, about the Fed minutes, about what Wall Street is actually doing right now. So you guys could see in the thumbnail, hedge funds are selling tech at an insane pace. So is this a sign that Bitcoin is in trouble? Well, that's what I'm going to answer today. So thanks for tuning in. As always, smash the like, subscribe to the channel. 2 streams almost every day, 11:30 and 8:30 p.m. Central Standard Time. Make sure you hit that notification bell and follow me on Twitter, Facebook, Instagram, and check out all the latest news, article, and guides at CryptosRUs.com. Welcome, welcome, welcome. Hopefully you guys are hanging in there. I know it looks bleak. It looks like Bitcoin is in real trouble. So, is it a sign that Wall Street is selling off tech right now? Right? So, let's discuss. First of all, Bitcoin is at 43,000. It's clinging on this 42.5 mark that you could see right here. And why is that important? Well, if you take a look back in December, that's when we had a flash crash from about 58,000 down to about this point, about 42.5. So we have this double bottom that's going on right now, right? And Bitcoin is clinging on. However, if you look at the fear, well, it's at 15. The same point as yesterday, but it's going to update in another 6 hours. And this may drop even lower to maybe 10 or 12. And that is not unexpected because if you look at right now, we're still over here at very far right. And you can see back in May, June, July, Bitcoin certainly went lower. At certain points went down to 10. And I remember there was a point where it was even below 10. It was at 8. So it's feeling like the same fear level as we had back last year. Okay, and I do have some correlations about what's going on now versus that in a little bit. But first, let's talk about what's going on with the Fed minutes, with rate hikes, with decreasing the balance sheet. You know, obviously last night I kind of explained it all, but today you're still seeing that. People are still trying to figure out what that means exactly. Okay, we're in a time where it's very different than before. We never had this much printing. And, you know, a lot of people are looking at, you know, some of these economic results or reports. So next week will be interesting because that's when CPI comes out. That's January 12th, so about a week. Last few months kept going up and up and up. In December, inflation rate was at 6.8%. which actually turned out to be higher than expected. And in the previous month, it was like low 6s or something. So it's expected that inflation will continue by another 0.8%, right? But who knows? It might go even higher. So inflation every single month, and CPI is not even a really good measurement of inflation, is going higher. So we're going to be in the 7s, possibly even 8%, okay? And that is far off from where Powell wants, which is around 2 to 3% per year. So obviously inflation is a real thing, right? And looking at this week, just paying attention to what's going on, I think jobs report, ADP employment report will pretty telling story how good the economy really is. I talked to a banker friend last night, happens to be a neighbor. I was asking him about what he thought about everything that was discussed in the 5 minutes about reducing the balance sheet and increasing rates. And he's like, well, it makes sense if inflation, right, keeps going up because it shows that the economy is really robust. However, what may stall everything is, number one, jobs, which is expected to go up. Okay, but if this employment report turns out to be absolutely horrendous and jobs didn't really go up, well, that is a sign that the economy is not as good as it seems. So that's important. And also what's important are Q4 results from the companies. If Q4 results are outstanding, well, then shows the economy is really good, right? But if Q4 results are really bad, well, then again, it shows the economy is not as good as it seems, right? So I think that's very important. If you look at those two elements, whether or not jobs and basically the earnings from the companies, whether or not they're good. And that'll be a really telling sign of if the Fed needs to accelerate their rate hike and sell off the balance sheet, because they're only doing that because they think the economy is doing too good. But if the economy is not doing so good, well, guess what? Those things could be delayed well into 2022, right? Very interesting things. And I think we'll get some insight later this week and next week, right? So going forward, what else is there? Well, I saw, a lot of stuff. For example, Treasury yield, the 10-year at 1.75. So obviously, these Treasury bonds are starting to go up. And the funny thing is, right, when Treasury bonds go up, even by like 0.1 or 0.2, somehow it causes the hedge funds and VCs and everyone else to just like really sell off tech, really sell off aggressive equities or investments and become more conservative and go into bonds or go into consumer products or anything that's non-tech related, right? It's weird how just such a small percentage increase would cause them to do that. So that's exactly what's happening right now, which is why you're seeing how NASDAQ is it got blown away yesterday. Today is not looking good either. And you could see that looking at this headline, hedge funds are selling off tech at the fastest pace ever in the last decade, right? So this is not a good headline and not a good move, right? And this is what Wall Street is doing right now. They're being reactive. They're not being proactive. They're being reactive. So you kind of figure that Wall Street and these big boys, the ones with billions upon billions or trillions under asset, they kind of know what's going on and they're not really guessing. And when they invest, it's not really reactive. But that's exactly what's happening right now. And to me, that's exactly what's happening. They're no smarter than the average retail investor. They're just going along because everyone else is thinking the same thing and they're following the herd. But here's the thing though. This is my argument to this. You may be thinking, well, what does that have to do with Bitcoin? And is this a sign of trouble? Well, obviously I'm talking about equities right now and tech stocks. Tech and Bitcoin is related. The two are moving hand in hand. So it does not surprise me when tech sells off that Bitcoin sells off too, right? So that's why I'm correlating here. And of course, Bitcoin is not only the greatest store of value ever in history of mankind, but also, yes, it's a technology. And of course, crypto, all the L1s and everything are definitely technology, part of the growing Web 3.0 trend, right? So I think there's a lot of relevance to this. However, my argument to this is, you know what? The hedge funds, they're reactive. They don't know any better. In fact, I would argue that they're behind the trend, that you and I and everyone else is actually ahead of the curve, and we're actually smarter than they are. Here's the reason why. You know how hedge funds, how they measure performance. They look at their year end, right? They close off their books year end, and then they show how much they've gained within the year. That's how they attract. And the thing that they have to show is, well, if S&P 500 grows this much, they have to be better than that. That's how they show that they're actually legit. Otherwise, why would you be giving money to them to invest? If any average Joe could just invest in S&P 500 and outperform it, it wouldn't make any sense, right? Well, take a look at this. S&P 500 for 2021 gained about 27%, which isn't bad. If you just bought an ETF that tracked S&P 500, you would have gained 27%. Guess what? When the hedge funds released their numbers for this year, this is all the major hedge funds in the US. You know how many actually outperformed the S&P? You could count it. 1, 2, 3, 4. Less than 5 hedge funds outperformed the S&P 500 in 2021. I don't know if you guys believe that. Many hedge funds actually was in the negative including Melvin Capital, who tried to short AMC and GME, right? Think about that. You have Melvin, that's negative 42%. Then you have all these guys, negative 25, 22, 8, 7, 3, 1, 2. It seems literally impossible to be down for the year in 2021 unless you're very heavy in gold. Then it makes sense, but it's not possible. And you look at everyone else here, yeah, you may look at, 5, 10, 15%, and they all sound dandy, they sound good, but they all lost against an S&P 500. And you know who they really lost against? Bitcoin. They really lost against Bitcoin because Bitcoin was up 60% in 2021. Despite all the volatility, despite all the doom and gloom, Bitcoin outperformed the S&P 500 by a wide margin, more than double, and outperformed literally every single hedge fund out there with the exception of one, Savest, and that's only because they decided to buy AMC and GME. That's the only reason why they're up. But just buying Bitcoin alone, as an average investor, you would have outperformed literally every single major hedge fund out on Wall Street. So, are you smarter or are they smarter? Think about that, right? Think about it. I would argue that these days, with the amount of information out there, right, and what I show you guys about fundamentals and growing adoption, these days, we have all the knowledge. We're ahead of the game. This is why right now you're hearing about hedge funds coming in and VCs coming in and public trade companies coming in into Bitcoin and into Ethereum and into all these L1s, right, that are growing because they're behind the trend. You and I and everyone else that got in are ahead. We know what's coming. They're following right now, right? And especially looking at their performance, it's absolutely abysmal. It's horrendous. If I put money into any of these funds, right, I would say give me my money back. But of course, that's not how it works, right? But this shows you that yes, Bitcoin, being in Bitcoin, buying Bitcoin is definitely the smartest move right now. All it takes is having patience. And even the smartest guys on Wall Street right now is changing their mind. Again, they're behind the curve. Ray Dalio is now recommending that, hey, everyone should have at least 1% to 2% of their portfolio in Bitcoin. He, for a very long time, he always thought cash was trash, but never bought into Bitcoin. Never. Thought that it would be shut down. He didn't trust it, but now he's changed his mind and realized, well, you can't put money in gold anymore. What else are you going to put it into? Well, you go put it into Bitcoin, right? So even he has come around. So we are ahead of the game, guys. We are ahead of the game. So just because the hedge funds and Wall Street is being reactive to what may be coming, right, and making rash decisions right now, we should not be following that. We need to stay stronger, continue our course, continue to hodl, and continue to dollar cost average and buy the dip because that is the best move right now. The smartest move right there right now compared to any other kind of investment that's out there, right? Because obviously looking at 2021, these guys don't really know what's going on. They're actually behind, way behind the curve. All right, now speaking about buying Bitcoin, well, the third largest whale out there who controls $5.2 billion worth of Bitcoin continues to buy. Continues, just keeps buying more and more Bitcoin regardless because he or she is a true holder, just like Michael Saylor. Just go keep buying because they know Bitcoin is only going to go up in the future. Short term, yes, there's going to be volatility. Long term, there's nothing more scarce. There's no harder asset than Bitcoin, right? And here's a good reminder, from Michael Saylor. Looked like he was a McDonald's manager back in 1992. And now he's one of the richest men on earth. And his company is arguably the largest holder of Bitcoin in terms of a public trade company, right? So, goes to show you, within a short amount of time, since 1992 to 2022, that's only 30 years. to become a McDonald's store manager to a multi-billionaire, all from Bitcoin. All from, no, I take that back. It's not all from Bitcoin. He made some good money with tech too, but he made a lot with Bitcoin. Okay, let's just put it that way. All right. Last few things I just want to share with you guys, okay, to keep you guys level-headed. Right now, what we're seeing, I led the show saying that Bitcoin is, it's low in terms of fear level, right? Very similar to when we were 30,000. But take a look. Many people also think the same way. They're looking at TA, looking at technical analysis, and looking at the patterns that Bitcoin went through back in April, May, and June, right? And correlating to what's happening right now, and it just looks very similar. Very, very similar. So, pretty positive if you're looking at it that way, right? And even Bob Lucas, also another TA guy, also thinks that is tracking very, very similar to what happened when Bitcoin went down to 28,000. However, he believes that Bitcoin's kind of reversal point at this point could be around $39,000 to $40,000. Okay, after that, then it could reverse. That's what he's thinking. But a lot of people's paying attention to what's happening right now versus what happened in April, May of 2021. Now, lastly, some of you guys lived through that. Some of you guys didn't. I think most of you guys watching lived through that. But if you didn't, I'd like to remind you guys that, yes, I was streaming at that time. And this was when Bitcoin touched 28,000, okay? Touched 28,000. The fear level, I'm not going to play the video, but I'll show you. Fear level is at 10, right? And it was very, 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 very scary. More scary than now. You know why? Because back then, you had a lot of fudders that would throw headlines and TA and whatever to make people think that Bitcoin was going to fall to 13,000, right? Because everyone was getting bearish. Everyone except me and everyone that was watching me. I told you guys to stay strong, right? I told you guys to stay strong. We were in a 3-month, basically, downtrend, right? 28,000, and literally everyone was screaming that Bitcoin was done. It was going to go lower. It's going to go as low as 10,000 or 13,000. And there was a whole lot of fear. And guess what? We rode it out. Bitcoin recovered. I helped you guys stay strong. I told you guys to stay strong. And I'm telling you guys the same thing. We will get through it. We will get through it. It's only been about a month that we have been down, right? We hit some of these marks that people are saying that we were going to hit around 42,000, right? And the fundamental of Bitcoin continues to be strong, and adoption and awareness and everything else is still growing. So in terms of my stance, I remain bullish on Bitcoin. I will continue to hold it, and I will continue to DCA whenever I can, right? And I'm going to look more into DeFi as well. Yesterday, I showed you guys about me putting some money into Anchor. I put a little more, and it's working like clockwork, right? So I think there's a lot of opportunities. Also, with DeFi, while you're waiting, you can make some pretty good rewards with your crypto and with your stable coins too. So I'll be covering more about that in the future. But tonight I got a surprise for you guys. Tonight I have something really good to share with you guys about L1, so you definitely don't want to miss tonight's show. All right, outside of that, CMC still pretty ugly, okay? But you could see that Bitcoin dominance still has not gone up. Bitcoin dominance was above 40%, climbed below 40%, and it's just staying there. But Ethereum is a little bit weaker today. You can see Ethereum is double digits, which is surprising. And most of the others are down, yes, because Bitcoin of what happened yesterday. So everything's moving down in tandem, but the L1s and altcoins are not being panic sold more than Bitcoin. So that is still very, very encouraging. All right, that's pretty much it, guys. Now let's do some Q&A. Benjamin Jarabi asks, can you share a portfolio that you built? I just DCA'd into it last night. And it was still up 60% yesterday. Let's see. I DCA'd a little bit more yesterday. And today, recalculating. Yeah. 59.72%. Still up 60%. So, shows you the power of DCA and holding strong. I built this end of June till now. So, it's only about 6 months. Still up 60%. I still outperformed all these hedge funds. Okay? Every single one, with the exception of one. That still kind of shows you. Again, a lot of these companies on Wall Street, they're behind the trend. They're playing catch up. We are a lot more advanced than they are right now. So, interesting thought, right? All right, scrolling up here. Let me see if I missed anything. William, thanks for analysis. Appreciate that. Bruce says, I like Big Macs. All right. Let's see here. Yeah, people that think I got a new puppy know it's my mom's dog, and she's fighting with my other dog. They tend to do that, so they're not actually looking to go out. Someone says, your dog says buy XRP. No, I'm sorry. Not a fan of XRP. Storm Detector says, you told us to hold on. We made a fortune. I like to think so. A lot of people that listened and bought and held, yes, but I know there's a lot of people new, right? They're not experienced. They don't like it. They haven't watched me for a long time. They may have bought at top, and I know whenever that happens, it sucks. Just like the previous top is 64,000 when Bitcoin fell down to 28, it sucked. Especially when you had headlines saying that, everything's going to go down to 13,000. But guess what? We got through it. Formed a new high. We're going through something similar, but we will get through it just like all previous times, right? Let's see. Oh, looks like someone called me here. Stan says tech devs likely target for the day on this cycle is about 81.63. What are your thoughts? Agree that that's pretty high. Of course, it can happen. When it comes to L1s, it really depends on a few things. Number one is, first of all, is their technology is solid, right? And I think it checks the check mark, and then checkbox. I mean. And then you got to look at the team, the partnerships they have made, right? More importantly, is the ecosystem growing and what's coming, right? What's going to make people hold the tokens? And that right now traditionally has been DeFi. DeFi has been making people hold tokens. And that's growing, right? So all those are being checked off, right? So if it continues, sure, it could definitely go up there. Anchor will make you a banker. So yeah, Anchor does give you the ability to create a lot of nodes and earn passive income, but you have to pay Anchor for it. It's not free. That's the only thing. Baba asked if stock to flow is invalidated. According to Plan B, it's not. It's not invalidated, and it's just a little bit off. But at some point, we know that stock to flow will be invalidated. At some point. But right now, it's too early to make that call, right? And I think, here's the kicker, okay? I think if stock to flow, once it becomes invalidated, it won't be because of external factors. Let's say what's going on with, geopolitical stuff. I think it'll be invalidated due to the altcoins, due to the L1s, due to DeFi that's ever growing. So I think once it becomes invalidated, it's not a bad thing. Not that, something major happened or really bad happened. No, I think it's a good thing. I think that's when Ethereum and others and Solana and Cardano and Terra and Avalanche These guys will become much bigger. They'll double, triple, quadruple, tenfold their market cap right now. And when that happens, then stock to flow, I think, becomes invalidated because a lot of the money will be going into these projects. So it won't be as bad as people think. Zach, I would never get into that. Never, ever. I would never get into any project that he has started. That's my answer. Thoughts on, I like CRO. I think Crypto.com, you just got to be patient with them. They rose up really fast. They've come down a little bit, but they have a lot of traction. A lot of traction. I don't like VVS though. You know, people keep asking about VVS on Chronos. I hate the token economics. I think that's horrible token economics. I don't know why they made it this way. So I don't like VVS for this. Look at the denomination, first of all. Look at the circulating supply at 2%, second of all. Third of all, look at the total supply right now versus the max supply. I mean, the token economics for this just looks horrendous. So even though people are very excited about VVS, and you can use it and make some good rewards on top of Chronos, which will help Crypto.com, but I hate the token economics of this project. So, do you stake SOL? Right now, I don't. Traditionally, I don't stake much. I use some centralized services like BlockFi. You know, with USDT, you get 9.5. That's pretty much the best in the industry. So I've dabbed with them. I have some in Voyager, right? Voyager just automatically gives it to you, but a very little amount. But recently, I really went hard into Anchor with Terra USD because that's insane yields. Insane yields, almost 20%. So I put a good chunk in there, and I'm just going to earn passive income from it. Well, someone just asked about what's Luna's futures like. I think it's very positive. The way their economics is built with Terra USD and Luna, I think it's a brilliant mechanism. I mean, if you actually take some time to look at how they formulated things, it's brilliant. In order to mint Terra USD, you have to burn Luna, right? And right now they give you a lot of reasons to mint Terra USD because you could simply stake an Anchor for 20%, and it's been consistent all year. And then people are asking, well, how did they give 20%? Well, first of all, people borrow, so there's a higher interest, and also they do have staking rewards too, normal staking rewards, which is about 10%. So they use some of that to offset what they're giving out, right? And the thing is, it's a cycle because people that earn more Luna, guess what they're doing with it? Some hold, of course, and some stake, but a lot convert it back to Terra USD and get 20%. So it's like it's a really interesting circle, but it works, and that is why Terra has blown up, why Terra USD has blown up, and I think they'll continue to do well in the future while they're still growing their ecosystem. Their ecosystem is a little behind, say, like compared to Solana, but they're really growing. They're really growing. Why is everyone okay? The people from Panyo Inu, okay, Panyo Impact, you guys gotta stop it, okay? There's a lot of people that's trying to convince me that that's a legit project, and I think one of the leaders emailed me saying that they're legit and they're gonna help coral reefs and charity and all that stuff, and it sounds really good. But deep in my heart, I don't believe anyone that creates a charity project did it out of the goodness of their heart. They did it to make money, and then they're spitting it into some kind of charity. Although that email I got from whoever it was, I don't know if he's a founder or not, did say that they don't have any tokens, that they bought it on the free market, just like everyone else. I get that. But still, I have a hard time believing that is the real reason. So, if you guys are from the Panyo team, or you're telling Panyo guys to super chat me, please stop, because you may not like the answer that I give. Could you share your thoughts on Curve and its future considering 24 billion TVL? Curve has always been interesting. I never understood how you know, what's the fascination with Curve, because it's a DEX for stablecoins mostly. Almost everything in there is stablecoins. So it's like stablecoin pairs, so it makes it really easy to change from one stablecoin to another. And whenever there's volatility, let's say one is off by 1% or 2%, so one becomes $1.03 and one is $1, then you could arbitrage and, you know, trade and make money. But it is widely used in a lot of DeFi projects, especially to convert between tokens. But outside that, it's not very promising to me. It's not promising, not very interesting to me. I'd much rather put my money into L1s. I don't know too much about Spell. I know it is some kind of yield project, but I don't know too much about them. Let's see. I already talked about Ant. I talked about VVS. I do not trust them. Do not trust their token economics. Birds and Bees. Yes, I was in BitBoy's channel just saying, hold strong, everyone. Watched an interesting video on Stash's channel. He was playing live streaming Splinterland Guild Battle P2E game, kind of cool. That's the idea I had, is to kind of start playing some of these games and just showcasing. And I think that'd be a cool concept. It's just that I don't have a whole lot of time to do it right now. But I may do that. And if any of you guys, I'm just going to throw this out there. If any of you guys are really, really, really knowledgeable with all the P2E games and you know about it, you played it, you know the ins and outs of them, right? Reach out to me. Maybe we can do something together. Maybe I could have you as a host or do something together with it. Because I know there's just so many out there. I've heard of them, but I just don't have time to play with them. So just throwing that out there. Email me if you are one of those guys. Let's see. Spells on Phantom. Okay. It does sound very familiar. Fracture. Luke, I have no idea what that is. No idea. Fracture. Decently big. 500 million. Let's see. Let's take a look. World's first fractional algorithmic stablecoin. So it's an algorithmic stablecoin, but it's fractional. Why do you need to? Oh, okay. Because it's partially backed and partially algorithmic. Okay, I don't know if that's necessary. It's just like stablecoins that's backed by gold. I don't know if that's necessary. Okay, it exists. I don't know what DEX, who's using it, but it exists. Not for me. But if you could get some really good yield from it, then I would say it's worth it, but I don't know anything about it. Pre-search is a decentralized search engine like Google, and they made some inways with Chrome and others. You could select it as a default browser in Europe. No, I think it's not Chrome, with Windows. You could use it as a default browser. So it's interesting, but I don't think they ever got any real traction. Chrome Dome. All right, appreciate that. All right, guys, I'll let you guys go. Overall, you know what? Main theme for today is, yes, there's a lot of fear. Is something like this, where it shows hedge funds, Wall Street are selling off tech, right? Is this a sign that Bitcoin is in trouble? Well, my answer is no, because my answer is hedge funds don't know what the hell they're doing. Most of them couldn't even outperform S&P 500, and almost none of them outperformed Bitcoin. Only one got lucky in doing so, right? So simply buying and holding Bitcoin, you would have made a smarter investment than almost every single hedge fund out there, right? So think about that for a second. We are ahead of the game. Stay with what works. Stay with a growing asset that has amazing fundamentals, and adoption keeps getting bigger and better. And just stay in the game, guys. Stay in the game. Bitcoin will go through its times, times of volatility, times of fear, right? And just like back in April and May when Bitcoin hit 30,000 and below, same thing. A lot of fudders out there. And I tell you guys to stay strong, stay in the game, stay focused, and that turns out to be the right move. And it will continue to be the right move. All right? So stay strong, my friends. Smash a like, subscribe to the channel. I'll see you guys tonight, 8:30 p.m. Central Standard Time. All right. Last question. Unicrypt, Sleeping Giant. B2B shares profits through, I'm not interested in B2B projects, really. All right. Take care, guys. Bye-bye.